Hey everyone, and welcome to another episode of the Payment Strategy Show. I'm Joshua Silver, founder and CEO of Rainforest. We help software platforms embed payment processing into their core products to grow revenue and improve customer retention. I am here today with a great guest, Andrew Mosawi. He brings over 20 years of experience in embedded payments and financial services. He's helped hundreds of software companies launch and scale their payments businesses, currently serving as an independent board member for both Jane and Ignition, two software companies with substantial payments businesses, also an operating advisor to JMI Growth Equity. He's got a lot of great experience and wisdom to share with us today. Andrew, thanks so much for joining us on the show.
Oh, Joshua, it's my pleasure. Thanks for inviting me. I love this show. I listen to every episode and I'm very honored to be invited. So thank you for having me.
Well, very good. Let's get into it. First off, I like to ask every guest, tell us just a little bit about your background. How did you end up in the world of payments?
It's funny. I think there's a theme that runs through every single or many of the guests that you've had, which is I kind of fell into payments. It's not something that I sort of woke up and thought, one day I'd really like to be in payments or embedded payments. It was something that sort of happened organically and naturally. I had emigrated in the early 2000s to Canada and I was looking for an opportunity and I found it. And it was actually at the time it was serving the nonprofit sector. And that's what fascinated me. I love the idea of serving the nonprofit sector and finding ways to help them raise more money and become more efficient. And we did that through payment services. And this is early in the 2000s. And so
Yep.
the first attempt was to actually try to sell merchant services directly to nonprofits, which anyone who's listening has ever tried to sell merchant services directly knows what a very challenging business and task that is. So I had the idea of actually going to the software companies that were serving the space. I mean, at the time, it was maybe 10, 15 really significant software companies. And so the timing was perfect. It was the boon of the online donation pages, and there was no easy way to set up merchant accounts to back end those pages, whether that's online or peer-to-peer fundraising type things. And we sort of filled that gap. So the timing was great. We scaled that business, and very quickly it went from a distribution challenge to a scalability. How do we sort of start boarding the, first of all, hundreds and then thousands and then tens of thousands of customers, and then just dealing with what ended up as being sort of billions and billions of dollars of donation processing. So that was that story. I left there. We sold that business. I left and did a couple of other things. I went to VP of International for Blackbaud, which is a software company, again, serving the nonprofit sector.
Yep.
And then a few other things. And before I was asked back by the then owners of IATS, which was the embedded payment business, to come back in 2016 to turn that business around and sell it, which is what we did about 3 years ago now.
Very good. As you said, most of the folks that we've had on the show have kind of fallen into payments. So there's this payments vortex. It sucks you in, 20 years plus years later, you're still in it, many learning since. Curious, Andrew, how did your perspective change when you transitioned from running payments at a software platform yourself to being more of a third-party advisor maybe at an arm's length now? What's changed as you think about the role and your observations on the market?
I think the leap from being in payments to sort of outside looking in was really how I got to. So when I sold the business, we sold that integrated payment provider, as I said, 3 years ago to Deluxe. I was looking for the next thing to do. And one of the companies that I'm on the board of, JMI, had invested in it a few years. And so I got to know the team there. JMI is not an unknown quantity to me. They were actually one of the early investors in Blackbaud. So I know many of the team there. And they asked me to come on board as an operational advisor. And I respect the company. I love their portfolio. And so it made sense. I think what's interesting is that the learning I had to do and have to do is that when you're I like to say if you're a hammer, everything's a nail. And whereas when payments is one important component, but still one component of a complex growing software business, there's a lot more nuance and complexity to actually scaling it that doesn't exist when you're just going it and just trying to drive growth for your own payment business. Even I use the example of just organization. Usually you would go in and say, right, well, if I'm going to grow a business, then I'm going to have my P&L, I'm going to have my resources, I'm going to be self-contained, and I'm going to be successful that way. Whereas payments doesn't work like that. It is a true team sport. And I think we'll probably talk about, which is the most successful companies approach it like a team sport, about how to navigate the complexities of growing a business within a business that requires buy-in and focus and investment from multiple different functions within a company as opposed to just one function.
Yeah, makes sense. I'm curious also, just to expand on that. I've talked to a couple other guests about the evolution of head of payments. Back when you started,
Yeah,
there really probably wasn't even a concept of head of payments.
yeah,
It was somebody doing payments off the side of their desk. Now we have this dedicated head of payments, director of payments, whatever title you want to call
yeah.
it. What are some things you've seen that have made heads of payments successful versus not?
I was having a conversation with the CEO late last year, and it was somebody that was just starting to get into embedded payments. And they're saying, well, we want to bring somebody in. And look, we just want to de-risk it. We need somebody that's done this 4 or 5 times. And I just smiled and I said, well, I don't really think those people exist. I mean, I think you and I, we've been in this business a while, but I think it hasn't been going for a long time in the big scheme of things. So there aren't that many people that have done it, certainly done it at scale multiple times. And so I think that's one of the biggest questions that a lot of software companies that I speak to, I have to sort of help them through, which is the decision as to whether or not you actually need a head of payments in business or whether or not you just need a really strong operational lead that is going to sort of facilitate. And I think the maturity of the business sort of depends on that. Because I've worked at certain businesses where there would frankly be organ rejection if you actually put somebody in there
Mhm.
with the intent of actually bringing all of those payment functions together and forging forward. And so there's definitely some nuance and sensitivity around making sure you get the right person. But one thing I do know is that if you're going to invest in a financial services business, and if payments has become either organically or through intent a large part of your business, then somebody needs to wake up every single morning and it's the only thing they're thinking of, which is how to scale that business and how to 5x it and 10x it. Then the question becomes, well, when do you do that? Is it at the beginning? Is it in year one? Is it in year? And that becomes the conversation.
How much payment volume you think people need to have or have line of sight to before it makes sense to invest in a dedicated payments person?
That's one of those how long is a piece of string questions. And I actually don't think, I think it's about it. I think it's about what the art of the possible with your payment business, about looking at it. And so, how big is your payment business? How big could that payment business be? I think this is one of the things that I talk a lot about, a bit of a broken record, frankly, which is rather than just sort of going to this practically and saying, okay, fine, well, we want to release payments. How do we do that? It's like, okay, let's hold on. How do you make payments the most impactful and the biggest growth driver, or one of the biggest growth drivers for your business? And let's play that out in 5 years. And what does that business look like in 5 years? Because it's not just payments, it should be payments and financial services. They should be accretive to the whole business. Well, okay. So if that all of a sudden that business becomes, you think it's going to be 50%, well, then no, you invest now in it. Whereas if you're releasing, as an example, if you're releasing one particular module that requires payments, but it is very much, it's sort of, that's where you start, well, then there's less urgency, shall we say, to front load that investment with what is going to be an expensive resource ahead of time. So it's the worst answer, Joshua, which is it depends. But I like to look at it as the opportunity as opposed to either the dollar value that you're processing or indeed even complexity.
Yeah, I was having a conversation actually yesterday with a platform in the field services space, and we got to the point where rubber hits the road, and it's like, is this something that you want to invest in or not? And we went through that exercise quickly with napkin math to figure out what percentage of the overall revenue today is coming from payments and financial services. What does best in class look like, and what's the gap, and how do you get there? So I think that's
Mm.
important for people to try to contextualize how big a part can payments be? And in many businesses, as you well know, it could be well over 50% of the revenue is coming from payments. Other businesses don't have the right mechanics necessarily to lend themselves to that. So I think that's important. I think the other nugget that I'll maybe pull out of your answer there, Andrew, is art of the possible, right? It's not only what is it today, but it's what could it be and how do you get there and being really thoughtful about that. And I think that's even made more complex by the point you brought up, which is we just have a shortage of payments professionals, just like we have shortage of teachers and doctors
Yeah.
and other professionals. I talk to a lot of founders about that when they're looking at partnering, for example, with Rainforest. And one of the nice things about us or some of our competitors is we give you access to world-class talent, and maybe on a fractional basis. But if you need interchange optimization help, if you need help migrating merchants, if you need help with product design, that's what that team does all day long. So they have that.
Yeah.
I want to talk about a misconception that's pretty common. A lot of vertical software companies think they just need to have payments and revenue is just going to come in. I think you'll probably agree that the reality is much more nuanced than that. In your experience, what separates the winners from everyone else? So said a different way, what do SaaS companies need to get right to hit that art of the possible and really drive substantial
Yeah.
revenue with embedded payments?
Yeah. So first of all, I always say that payments, if it's done properly, you shouldn't treat it like a product. It's not a feature
Mm.
release. It's like painting the picture of what could be. It's like, well, how is this going to add value to my business, to my software business? And so, first of all, do I have the right to be in it? Do I have the right to be in this particular? Then I used to call it the natural owner of the transaction. Does it add value to my customers and my customers' customers by doing that? And so I always challenge companies that are looking to get into it. I challenge them, say, okay, fine, well, why are you doing it? What does this look like in 5 years? What is the impact of this? And quite frankly, at the end of it, if it is right at the end of it, you look at it and say, okay, fine, well, is the opportunity cost worth it? Because you're going to do this properly. You're going to have to invest in it. You're going to have to spend what an old boss of mine used to call management attention units to actually get it done and do it right. And so if the answer is, well, that's actually less important than something else, then do that. However, if indeed it is, and what we're seeing is it is a substantial driver of value, well over and above just revenue. So is payment revenue valuable? 100% yes, it is. It's high margin. It's usually treated as recurring. It grows with customers, so it drives NRR. But one of the things we see time and time again is that it lowers churn. Customers that have payments attached, they have lower churn. I have an example from several years ago where we actually took a segment of a customer base and we analyzed it. And those customers that had payments attached churned 50% less than those that didn't. And there's obviously sector and transactional specific things behind it, but it's a meaningful change, a difference. And so in order to achieve those kind of results, and that's not just the revenue-based results, but the actual overall health. An old friend of mine used to say that a customer that isn't using payments in his software company is not extracting the full value of their solution. And so to achieve that, it has to be an overall value proposition. It has to be embedded. There has to be value for everyone in the process and not just inserted into the process. And I think that's what distinguishes the truly great embedded payment software companies from those that treat it as a look, let's just integrate and have that capability, but not actually tell the story, create the value proposition, and create meaningful differences that are going to drive the customers and their customers to use the solution.
Yeah, makes sense. What are some of the other biggest mistakes that you see software companies make when it comes to payments? Let's go a little deeper there.
Okay, I'm going to say something, and I want to know if you agree with me or not. But my my biggest uh, my biggest feeling or frustration, not even frustration, but his position is that vendor selection is not a payment strategy. And so we have a lot of companies that will say, we want to do payments. Who should we choose? Well, actually, that's probably not the first question. Is the partner that you choose an important decision? 100%. They are going to be, that decision, by the way, is going to determine how successful you are. However, it is not where you start. Where you start is a clear understanding of whether or not you have the right profile, position, investment, and resources in order to make it successful, and what success looks like for you. And then once you have a clear understanding of that, you're in a better position to go and understand, well, who is that right partner that is going to help us realize our vision and who is best positioned to be our support through this whole process. So that's my perspective. I'm interested to know if you agree with that or not.
Yeah, I actually couldn't agree with you more because I think a lot of times, and we see it on the selling side, a lot of times software companies are coming to us with a checkbox list of features. Do you have this
Right.
feature? Do you have that feature? And I often encourage them, I'm like, take a step back. Like all those questions absolutely are important and we'll answer it. But at the end of the day, who's going to be your partner in growing the program and what are you trying to do? And what are the metrics outside of the factors outside of just price and feature functionality that you care about, service and help with this, what we call strategic program management, really building the program, rolling it out, selling payments, doing the migration, all of the non-technical things sometimes is the hardest part. And that tends to get the least amount of attention. So I think coming in with a good answer to the question, I call it right to win. You
Mhm.
call it kind of natural owner of the transaction. I think it's really the same thing. But do
Yeah.
you have a natural place in that transaction flow? If you do, are you committed to the success of it? What needs to be true for that to happen? Then you can select your vendor. I think that's really the right order of operations.
Yeah, and I think it's not treating it like a product feature. To be done truly well, it really is a team effort. It has to be, where are you positioning it? How are you creating value? And the value does not come that you are cheaper than someone else. The value comes because of the integration, because of the product functionality that you're building behind it, the logic that you're using. Those are the things that drive value for your customer and the clients or the customer's customer, that actually makes them want to stay with you because they're actually extracting value of it. And to leave you, well, why would they do that when they're getting that experience? Those are the things that I think create the most value with these companies. And they're the common thread of the businesses that I have the privilege of working with that are really embedded payments at scale. They're the ones that have been intentional, they've been thoughtful, they've invested in what are the right areas that provide the most value, and then how do we partner with the right company to actually make sure that we can deliver those to our customers. And that's what differentiates the great from those that just see this as a, okay, well, I think we should have payments, it would be a good additional revenue stream, let's launch that in Q2 and let's see what happens. Well, they may or may not be successful, but the question is, does that get to the 30, 40, 50% of overall revenue over time, which many of our businesses are enjoying right now?
Yeah, makes sense. Which SaaS companies stand out as role models for people who have gotten payments right? And what do you think they did that made it so successful?
So I think I'll speak to the ones that I know very well. I'm proud to have been on the board of a company called Jane, which is a software company that serves the allied healthcare industry. That's think chiropractors, physiotherapists, mental health practitioners. And they demonstrated those things that we've talked about. They built their business with a real focus on just delighting their customers. They just want to help the helpers, and that's the line. And so in everything that they do, that's what they do. And it was the same with payments. They wanted to create a delightful experience with the payment, their embedded payment journey that they did with others. Now, delightful and payment usually aren't used in the same sentence, and so it wasn't something that they rushed out. They've been very thoughtful, very intentional about how they've done that over time, and as a result, they've built an extraordinary business that not only is financially accretive, but also adds tremendous value to their customers and is a great foundation with which they will build on in the future and provide other financial services that their customers have been asking for. So I would say that is a good example of one. And then there's another business that I work with that again is very international in nature. And that complexity is very, very different. And being able to have a very local approach to the even sort of things like mix method of payments behavior, merchant behavior in Australia versus the US versus Canada versus the UK, that takes a lot of thought and is difficult to do at scale, but they've been quite successful at doing that. That's again a company called Ignition that I'm proud to serve on their board as well. So I think that there are some examples of those, and there are countless others, by the way, that I know. I mean, for me, I see the ones that I've sort of had the experience and I've had the journey with, but I'm always fascinated to know which are the ones that you hold out there, because you've been doing this a long time, Joshua. So which ones? I'd like to ask you that question.
I think it's interesting. A lot of people point to the forebearers of this early on, the mind bodies of the world, the Shopify's. The ones that actually excite me are some of these new nascent businesses that almost have payments first. The software is almost a means to an end to get the payments. And I think that's an interesting trend that we're seeing overall, especially as we see the hyper specialization of vertical SaaS. So you used to have field services, then you had roofing software, then you had
Mm.
commercial roofing software, then you had commercial roofing software with solar panel. And like it keeps getting more and more specialized. So I think we're going to see a lot more of that hyper specialization with payments first. And those are the ones I think overall that excite me the most because from day one, they know it's going to be a core pillar of the company, and they do a lot to organize the company around that, and they're seeing fantastic financial results from it.
Yeah, that's a great point. One of the things that we don't see a lot is people mandating payments. I think there's been some surveys and say, do we mandate payments? Well, mandating payments is just a polite way of saying you're a payment first business. I mean, you are, that's just part of your solution. That's what it is. And I think we will likely see a shift towards payments being seen as sort of the second tier after software. It's like, well, how do we actually create how pricing and packaging that actually allows companies that don't or allows customers that potentially don't have the bandwidth, abilities, resources to pay for the software, then they pay for things transactionally. And so we actually saw that a lot in the nonprofit world, which is where the software was given away and the money was made on the transaction. And so I think we'll be seeing more of that as well. But yeah, it is the new, as you say, the new innovation and the new companies that are coming along that are payment first. That's going to be a fascinating chapter.
We only have a few minutes left, so let's be brief, but let's look at the next few years. What trends, what challenges, what opportunities do you think will define embedded financial services for the next few years? And how should SaaS companies and fintechs best prepare for the changes that are coming?
So I think what is crazy to me is that the success of this, when I started, it was like there were very few. This conversation didn't even exist, as you well know, and I was like in conferences, I was the only payment provider in the conference. And so I think that in a short period of time, it has become such an important part of businesses, the strategy of their revenue, of their profile. But we're still at the very beginning. And that's what is extraordinary to me is that really, if you look at this is the first step, which is if you've earned the right, whatever nomenclature you want to use, once you've done that in payments, once you've created the ability to support a foundation of payments, then really there's no limit then to what your customers are going to want to provide. I read this fascinating report last year. I think you probably know the one, which is there are more merchant accounts being issued from software companies now. They've overpassed issued from banks, which was always the legacy way. So everything is changing, and that's going to be the same with financial services. So once you've done payments, to be able to offer you those additional financial services like lending, there's issuing, there's even loyalty programs, insurance. There are all of these things that you will be able to layer on if your customers that are appropriate to whatever vertical you're working in. Many of our customers and many of our portfolio and many of the companies that I'm seeing, they're thinking about that now, but it's still very early in the journey. So I think that we are at a very exciting tipping point in embedded financial services. I think that the next 5 years is going to be extraordinary. And I think we're going to see payments as really just the entry point to that. That's literally just the first step, which I think is the most exciting. And it's about how we as providers and people that serve the space, how we can best sort of counsel and advise our software companies about how to navigate that journey, because I think the ones that do it successfully are going to see tremendous success.
Love it. Final closing thought. If you could give one piece of advice to SaaS leaders looking to realize the full potential of embedded finance, what advice would you give them?
I would think big. This is just take a beat with your leadership team. Look at all of the opportunities that are going to be provided through embedded financial services, and then create an end state of what that could look like for your company, whatever it is that your company does. And then make the decision as to whether or not that is an investment that you're willing to back and that you should back right now. In the same way that people now are doing with an AI strategy, it's people should be doing with embedded financial services. And so if the profile of your business lends itself to embedded financial services, many companies don't, but if it does, then think big, because it is more than just payments. Payments is the first step in what can be a very accretive and important part of your overall business. So I encourage everyone to take a beat and think big, and then invest accordingly.
Think big and art of the possible. I love it. Closing thoughts. Thank you so much, Andrew, for being with us. This was a great episode. Loved all of your insights. Thanks for being with us.
Great to chat. Nice to see you again, Joshua. Thanks for inviting me again.